Hello, everyone. Today is Saturday, January 21st, 2023. I wanted to review with you the price action for Friday on ES. Actually, this is the only instrument that I'm going to review today. But it's a good analysis and it's a good learning experience for you guys. So let's get it started. Before that, let me remind you to check the description of this video. There's a couple of links that are interesting there. One is you can connect to my Discord and then participate in that community, the setups and the triggers and they are defined or they are discussed there in that channel as well. So let me and also remind you that until Monday midnight there is a promotion with Apex, so you can get a 80% discount and any 80% recurrent charge after the first month if you subscribe before that. I do have 4 of them now, and probably I'm going to add one more. I'm not sure yet. I'm going to decide. I still have time to decide in between now and Monday, but 1 or 2 more I may add. So guys, it would be a good idea to take advantage of that 80%. If you're a newbie, take one. And see how it works. It's that would give you some experience on what it is, and also you wouldn't risk your money if you're trading in a live account if you don't have experience. If you also if you are too newbie, check or make your trade in simulation, and so you gain experience on what the setups are, how you feel trading, and all of that. So you understand the method, you understand the strategy, and then jump into one of these funded accounts or trade your own money. But when you have experience and you learn how to manage your risk, you learn how to manage your profits and all of that. So okay, so let's get started. I'm gonna analyze only ES today. Market started to range or to go sideways or consolidate overnight on from Thursday to Friday. So you have here January 30th, January 20th, right there. That is midnight, and then you saw very clearly that the market was kind of doing this consolidation here. So what I do is and I'm gonna do it for you, and this is what I did exactly. So what you do is to take this range tool that I have. It's actually a Fibonacci retracement that I modify the levels. I do have some questions about that. So what I'm gonna do is to show you right away the the levels for that. So price, where is it? It's here in no, it's in this is six price levels, and then you get 100, 200, 300, 0, 1, minus 100 and minus 200. So those are the levels, and I colored in between them within each line. So you can investigate that one there. So what I do is to project the next levels up. So this the move is to the upside or to the downside at the levels that I just mentioned, and they are marked right here. So minus 200, plus 200, 300, and the 0 level is right there. Okay, so Yeah, I was expecting, coming into the day that it was going to be a range day. And you see here in the 30 minutes that you see the same behavior overnight, right? So you see here that there is a consolidation area, and now at this point when the market opened, the lines started to stack to the upside here. So you see that the all the moving averages are actually stacking to the upside in the morning. That happens. Now what happened here is that you do have the 200 moving average right there above the price. So obviously or what you can see here is that the price got a move when the market opened, and then it started to consolidate in the midday. So we will see that one as well. But it was coming from consolidation here. It was it was moving down, consolidated, and then right there broke the yesterday's high, which is that line there, and then started to move to the upside after some consolidation. So you see here that we have that compression area, and there was a first break in the morning right here. So let me move it a little bit. So there's a first break was right there. So you could have entered this one as to the upside for a short or small gain. Well, more than small. For a good gain actually, right there from there to the top, right there. So probably around in between the two contracts, you could have had probably around $400 in between the two of them, maybe. So let me see, 1, 2, 3, 4, 5. Yeah, so you have two targets there. So then the market came back down. So you have one move right there, breaking out of the consolidation and also breaking out of the opening range, the 30 minutes opening range for ES. So that one broke and then came back down. In here, if you see the momentum when it broke was a little bit extended. So so you are not looking for a large target on that first break. It was a small target that, or maybe it could have gone back down, but once it moved, if you see here, there is a wick out of that bar there that it's kind of confirming that move to the upside. But it was actually, let me expand this one a little bit, because you would see that if you entered here and you put the stop too tight, you enter right there in that candle when that one crossed to the upside. So your stop is right down below that bar there. Okay, that is in the break. Now the price came back down and moved to that level right there. So you see that wick below, and kept moving to the upside. So you could have been scared and then take take a small loss right there for if you saw that candle, because at this point that candle, it's kind of like looking that it was going to move to the downside. Now, if you have kept your stop right below that candle right here, then you wouldn't have been stopped out in there. Okay, so you could have two targets in that area there. Now, this one is a move back in consolidation. So you do have here a good bounce out of these moving averages here, which is also a good entry. Now in this one here, not with all the rules, but it's bouncing off of the moving average of the smooth 50 or 50 simple moving average of the 50 moving average. So that would have been a valid entry if you are taking a little bit or more risk on this one here. So it moved down, bounced off of that one there, and also bounced off of the cloud. You see the cloud right here. So the cloud is below, and the wick is out of the cloud. Now it's kind of like a dirty bounce, but it's a bounce. And then you have here the first line on green moving to the upside. So yeah, it is a riskier take, but it's a valid one. So now it came back down, bounce off of the moving averages, and also bounce off of the opening range and bounce off of the cloud. Price is above the all the moving averages here, so you have a good move and a valid, really valid entry right there. And this one you have momentum reset already, coming back down. You see that that behavior here. So let me mark it here. So the white line, which is the fast line, came back down and moved to the upside, and then momentum, was crossing to green again in this area here. So you see right there, that one is where you would take, you would see that, and then that one was a valid entry, moved to the upside, there. Okay. Now came back down, and they made this a dirty, dirty, very, very dangerous area for traders. So, you have here momentum coming down in consolidation, but there were some wicks here. So you could have been, trying to enter again this bounce, or maybe that bounce, or maybe that bounce, and then maybe that bounce, or maybe that bounce. You would, if you were trying to do that, you would be eaten alive on this one. So what is the rule, and what do you have to? Could you do? Not what do you have, but what could you do there? Is have a counter. So you count one trade that it's against you, and two trades, and then you're out, and see and wait until those move out of this area here. Price came back down all the way to the opening range again, and then bounce back up. So very dirty move, and very, very. I'm sure that a lot of traders were tricked in here, in this area here, if they were trying to go long, which has been a mistake, because you still have momentum going to the downside. Let's keep moving. So 11 o'clock came, and then you have a move to the upside here. There's another momentum reset right here. So that one there would have been a valid entry. Now you do have some resistance in this area here. But there's a good distance in between this bar and that one there, which is the resistance. So you could have been, you could have taken this one with the probability that it was going to continue moving to the upside would have been, and we are now out of this range, and a little bit far from the red zone. So you're out of this range here, and then you're still far from that zone, which is the next resistance area. And you saw there that there is some resistance right there. Okay, so now you're in, and now in the red zone, you have to be careful because it's already extended to there. So what we we could expect is that the red zone is oversold, and then it's an area where you're looking for one or two tries, and then a potential comeback to the range right here. So look at what happened in this area here. Another zone where you could have been killed if you were not careful, right? So this one was in between 11:30 and 1:10 a.m. or 1 p.m. I'm sorry. So you do have a consolidation area that was very, very risky, dirty, and I mean, this area here, you have been chopped out very, very badly if you try to trade that zone. Okay, so let's continue to the downside now, to the right side, and you see here momentum or price came there and made a second move going to the downside. So I would be expecting that this move would go all the way down there, but market reacted at this price level and then came back up. So that would have been a let's see here, right here, momentum, yeah, moving to the downside. That would have been a valid entry. Reversal though, you see that there's no the moving averages are stuck to the upside here. So it's not a clean. This one is a reversal a trade, but it's a break out of this consolidation area, anyways. Out of that consolidation area, so that could have been a reversal, a counter trend trade, which I don't take normally, but if you would take this these moving averages, they're stuck into the downside, but there's no synchronization with the ones that are with the 30 minutes. This one is moving to the upside. So, but you never know. So this one here would have been an area to probably take a couple of trades there. Now, once this box is formed, right? If you extend it, you have a break right there to the upside. Okay, so you have a break down there, a break down there, and then here there is a fail and move to the upside. So now that you are in above the 300, you are more confident that the move is going to probably keep moving to the upside right here. So I see it's already moved, and I received this question a lot. So one confirmation that the move is strong is that if you passed this area right here, so you're looking for bullish setups above this area here in this area. So you're looking for bullish setups, because when already passed, market is confirming the bullishness in there. So what you're looking for now is a revisit to this area and then moving to the upside. Remember, you are not buying out of this break, but you are buying out of this support. Okay, so you see here that there is let me expand it here a little bit. There is an attempt to move down, create a double bottom, but bounce off of the 300 level resistance. Now you're looking at now the 4,000 level right up here, and you're already at R2, right? Kind of an R2. If we keep moving up, you see how nicely it's moving to the upside. So that one there is a that one there would have been momentum is already extended, but it moved so much that this indicator here doesn't really. Once it passed the 300, you are more confident that the move could move, could keep moving. It also can fail, right? It can go back down and visit this previous high. This is the other zone that market had a lot of work to do, and did a lot of work in this. I'm sorry, in this area right here, right? So if you see, it's battling on crossing this previous high, but once it moved above this channel and then moved above this 300, the move, it's kind of confirming itself. Okay, so let's move there, and there's another move. This one is already in the afternoon, 2:30, and now you see how it moves there. If you look um, at the 30 minutes, one thing that you have to notice is this candle right here, which is a doji, right? So this one, it's a lot of indecision. There is a 30 minutes green candle there, proposing a move to the upside, and then there is a consolidation in this area right here. Now, when you see this doji candle, means that this the buyers here and the sellers here are battling, right? So there's no there's indecision in a doji. Now, um, so what happened here is that when it moved above this candle, then you have some sort of confirmation that the move was going to keep going to the upside, and then so that one there, or you could have considered this one. I'm sorry, this one here as well. So it moved above this doji, or above that resistance on the other candle before that, and then you have confirmation that the move was going to keep moving. And then this one is it's 4 p.m. moved all the way up. So you see here you have an entry that right there. You have an entry right there. This one would have been a loss if you take the break. But if you take the first one, you would have one target off right there at least. Or no, one target there. Now you keep moving up, another target with a potential large gain that right there if you had a runner, then move back down, and then probably that were the couple of the two trades that you were doing. Now in here you already are at 330 in here, but in the market started to consolidate in this area. Already extended, but move nicely to the upside. So let me see. I was looking at another area here that. Give me one moment. I'm gonna put the I'm gonna put here the 240-minute chart. You see there's 240 minutes. So in here you're facing that doji there. So you have an area of consolidation that was kind of like moving sideways from the overnight into the day, right? So you have right there a lot of consolidation and then a break to the upside. So there's confirmation here on this 240 minutes that it was going to continue moving up, and at least you were looking for a touch into the 50 SMA, which is that yellow dotted there, or segmented bar right there. So in the move, was, even though it was flattering or getting more flat, you see that the moving average was moving to the upside, rested a little bit, and then this one was coming back down, consolidated in this area, and then broke to the upside. So that would have been an indication. Now you were facing resistance here. You were facing resistance here at the end of the day, but there was a battling happening, as we saw on the other chart. We have a battling in this area here before kept moving to the upside. All right, so that it is. There were a couple of good trades that you could have taken advantage of in there. But basically, I mean, the lesson here is you have to be really careful of these areas. Again, that's why I recommend, or what I do is, you have to trade two in a row, two losses in a row, and then you wait, because if not, you could have been murdered in this area here, in that area there, and potentially, if you're trading in this area here, which is a very narrow range in ES at the beginning of the day, you can have some severe losses. All right, so that was it for the video of today. Hopefully you like it, and see you next time.